I mean, at this stage of the game, I mean, you still have to break out of this channel. The reason why I'm slightly bullish is just because it's a risk reward assessment. If you have this white trend line down here that's protecting you, and you have this one, and this white one is the big, this is the big kahuna right here. This is the epic channel here that we've hit here and here, and we keep, the bounces, the side.
We had a move up to the 30 and then we dropped right back down. Was that
yeah,
I
think that's the bottom line here, is that literally you have this tight range that we've been in for the last 2-3 weeks now.
What do you is that a day? Is that a daily that you're zoomed out on right now?
Yes, this is a daily Bitcoin chart, correct? Yeah. So basically we were sticking in this range. You kind of came up here, you came down, you bounced, you kind of hammered on this lower level, it held. And then it looked so optimistic just a few days ago when we surged above this line. We closed above. We got this pause candle right here, and then it just gave it all back yesterday and kind of put us back in this channel. So I'm still slightly very near-term bullish on Bitcoin. I do think that there's too many bears out there right now. There's a tendency when any sort of asset gets too many bears, price action will go in the opposite direction until that mitigates a little bit. And also the charts continue to hold this lower level. So you have a level at 28,700 right here. And then this lower channel line, which is just such an impressive channel. You can see it hit here, and then it pierced here on that UST panic, the Terra Luna debacle, and it held. So that's really your line in the sand. Like for me, I'm long Bitcoin here. I only about a 12% position in my portfolio, so it's not a lot. But
you're long from where? Like, show me the
30,
point
30,
at which you
30,000, yeah.
From 30K. Okay, I want to ask.
Yeah, so I basically, when it came down to this lower level, I bought. I was down a little bit on the initial flush, then I was in the money, and it's kind of just been going in and out of the money for me, recently here. As long as we hold this down sloping trend line, that's kind of the line in the sand. If that gives way, then that would be something where I'd start to think we're going to 20,000 if that gives way. As long as it holds, I'm rolling the dice, and I think you get an up move to maybe 34.5, 35, maybe 38,000. Midterm, I'm still bearish. We haven't seen the washout that needs to happen yet in crypto. We started to see it with Terra Luna and UST, but it's got to be more. It's got to happen to more points. The way I was looking at it is you got to close above, which is like step one. So breakouts are 3-step processes, and what you're really looking for is you don't want to get caught with an institutional game, and institutions love this type of play where they'll take a chart above a level and then get everyone to jump in thinking it's a breakout, right? So think about how many Bitcoiners saw this, right? And they were like, oh, it broke out, and they jump long, and then it's like pause candle, reversal, take their money and say thank you very much. So what I like to do is I use what's called the confirmation signal, and what that is basically this was your first close above that line. I need to see a close above the high of that candle, which will then confirm it, right? So the high of that candle is right there. I look for kind of what would be called a confirmation candle breakout. Point on the candle, it has to be above, yeah.
Okay.
And that basically, what I found is that institutions are only going to commit so much money to reversing the move. And the longer it stays and the higher it goes, it's going to attract more money on the long side. They can only fight the battle with a limited amount of money, right? They're not going to put themselves in a position to lose $1 billion to make 100 million. So usually if you get that close above, now you have a legitimate breakout. Now it's off to the races. We didn't get that, and we got that spinning top just like you said. And then unfortunately a reversal real quick. I was disappointed because I was still hoping like, okay, well, sideways candle, maybe you start making a bull flag and then can break up. And it just kind of ripped our hearts out in that respect. So doesn't mean it won't happen. We can easily go back and finally confirm, but watch if you do confirm, watch the move you get after that. It's a legitimate breakout at that point. It's important for investors and traders to recognize that emotion is what drives, especially the retail crowd. So institutions, when they're looking to make money, are going to try to exploit that, right? So they're going to try to play on your greed and your fear. So when you had the Terra Luna debacle down here and it was below this trend line, you had so many people just throwing in the towel and saying, I'm done. And what happens? We go right back up. The same thing right here. You have buyers coming in. The emotion starts to say, oh, this is going to be the big breakout. We're going to go start ripping higher. And they like to just reverse that on you. So you really have to be sure it's a real breakout before you commit, in my opinion. Otherwise, it's scary. I mean, they have these algorithms even built to kind of do these kind of games, and it's shark infested waters, no doubt about it. I think your minimum upside is only, unfortunately, like 33,000. We kind of already kissed that. So my guess is you have this level here, which is this low pivot, which is around 34.5. I'm optimistic that if we start to get a little bit of a momentum move, we can go here, which would be around 37.5, 38,000. Also, if you do a trend line down here, you kind of get to that same level. So one of the things in TA that we always look for is that when two trend lines merge, that's always going to be a more powerful level of resistance or support. So in this case, if we did get up here, this might be even a shortable level in terms of resistance for Bitcoin. But yeah, I mean, at this stage of the game, I mean, you still have to break out of this channel. The reason why I'm slightly bullish is just because it's a risk reward assessment. If you have this white trend line down here that's protecting you, and you have this one, and this white one is the big, this is the big kahuna right here. This is the epic channel here that we've hit here, and we keep, the bounces, the size of these bounces are huge off this line. So I'm going with that because I have the protection below, and I understand that if it breaks, then I just stop out. And I maybe take a $4,000 loss, not the end of the world, 10, 15% type exit strategy there. Yeah, I think that eventually we will see some sort of depression type scenario. In my trading career, I've found that it always takes longer to get there than everyone thinks, right? So if you go back to like in 2005, 2006, we could all recognize the housing bubble, the financial kind of craziness that was going on, but it really took till 2008 to collapse. Same thing in the 90s, right? Alan Greenspan called the tech bubble then irrational exuberance in 1995, and the tech bubble didn't top out till 2000. So he was 5 years earlier, and that was the Fed chairman at the time, right? Mm-hmm. So I think it's important to recognize that the Fed is definitely going to be tied a little bit. They can't print the same amount of money with inflation where it is. I think that's becoming more and more unpopular now that people are feeling the effects of price hikes and gasoline and all these other things that they're having to pay for. But at the same time, they still will have some methods to stimulate, whether it's through foreign markets or other means. So I do think we will get to a point where we have, some sort of depression. And if you think about it, the last one was in the late 20s, early 30s. There's not a lot of people anymore that have experienced a real Great Depression. And so we're kind of setting up for that. The other thing that's kind of interesting is you do have the 100-year cycle, which is a pretty powerful cycle. Interestingly enough, you had the Spanish flu, right, in the kind of the 1918-ish area, and then in 2018, really 2019, we started to get into COVID in 2020. Well, 2020 more so. But the point is, again, that's the 100-year cycle, and you had a virus, right, that really decimated the world back then, and did so this time as well. So it makes sense that I would say if we're looking at the Great Depression-ish type thing, probably late this decade, maybe in the late 20s again, and it might coincide with that 100-year cycle. But I don't see how it's avoidable, right? You have this constant kind of keeping the patient alive by fake means, right? Just giving them injections of whatever. And that's the economy I'm talking about from the Federal Reserve and the government. And eventually the patient just keels over, right? I mean, they can only live so long before you have that flush out. So I think it has to happen. It's healthy to happen. It wouldn't be. This is the other important thing is cycles are you naturally have an expanding cycle and a retraction cycle. The Fed has artificially kept us from having big recessions or any recession really. Because as soon as, you look at COVID, they came in with gangbuster money, and it's not healthy, right? It's cycles like the seasons. You go through every season, every year. You kind of have this natural thing to it. And when you don't allow that to happen, it builds up this kind of pressure that eventually has to give way. And it's true that even in the great, the COVID collapse in the markets, it came back so fast that it gave people that false sense of security where it's like, oh, well, if it drops 30%, it'll be back up to the highs in a month. So who cares? And that's not the way bear markets work. Bear markets, at least in the stock market, can last years. And that's more normal, and it will just eat away at you. When you see your account day after day down 30, 40, 50, 60%, and it's that way for years, it gets depressing to the point where people do throw in the towel and kind of just say, all right, I've had enough. So, just be careful. I think that's the bottom line, is that you should only be trading with money that you can afford to lose. And if you have a long-term view, then at least you can say, okay, I have the long-term view. but then you can't get whipped out at the lows. I mean, I do think that eventually the crypto market, at least specific cryptos like Ethereum and Bitcoin, become a safe haven. They just have to get to a realistic price where big money really starts to think of them like that. And I think you're starting to see that a little, but you're not quite there yet. But I do think that a lot of the cryptos out there, anything past the top 30 maybe, I mean, there's a question of why are they needed? What are they needed for? Is it a valid reason that they should survive? And yeah, I think that's what's going to come out of it, is that some of them won't, or a lot of them won't. But yeah, I think that the crypto market will eventually mature into a gold type market of safety, offsetting the dollar printing and all that stuff. I think you will have a scenario where the higher like Bitcoin's price goes, it does take a huge amount of money to move it an equal 100%, just because of the market cap at that point. So I think that's absolutely correct. But I think also you have this scenario where you have price. I mean, there's a certain amount of maturity that needs to occur in the crypto space that hasn't occurred yet. And that's keeping a lot of the big money out. And we have to be clear on this, is that, when you have an asset like Bitcoin drop like it did, and then you have the UST scenario and the Terra Luna thing happen, I mean, there could have been a lot of big money that was kind of getting interested in getting in Bitcoin. And now they're like, all right, I'm not going near that, because you have these scenarios. So, I hate to say it, but UST and Terra Luna definitely set back crypto as a whole, probably months, if not a year. And I there's a lot of people that have talked about this elongating cycles from 4 years to more. But I've always said is like, you have to show proof of that, right? And we don't have proof. As of now, it is 4-year cycles, and we have to just go with that until it's proven differently. I think for the most part, institutions have a very strict kind of risk assessment form. So for the most part, they're going to gravitate towards safer stuff, which in crypto is Bitcoin, Ethereum. So they'll allocate a majority of their money to those. But that doesn't stop. Like, there are plenty of institutions in the stock market that will invest smaller amounts in these kind of what would be considered the smaller altcoins that could do a 10 times or a 50 times type thing. So I always think there'll be some money that will be interested in that kind of thing. But I certainly, honestly, I'm begging for regulation. I know that sounds sacrilege in crypto space, but if you really want, like, if people want Bitcoin to recover and go higher, the only way that's going to happen is if you get regulation where things like the UST and Terra Luna don't occur again. Or if it does occur, at least investors get protected, like an FDIC insurance type scenario. So I hope they get regulation out. I think the regulation is absolutely key to the bear market ending. I think, and I agree with you. I mean, the regulation, it's a double-edged sword. It absolutely is. But I think there's like stupid as a stupid does, where some people, they probably, you just can't, when you do stuff, you have to be aware of what you're doing. Personal responsibility. I'm a huge believer in that. And then there's other scenarios like where, I think I told you guys about it the last time, like where I had my SIM card jacked and someone literally just went into a T-Mobile, but they went into a T-Mobile store and they basically pretended to be me. The guy switched over the SIM card. Like there was nothing I could have done in that scenario that I'm aware of to not have allowed that to happen. And then they got into one of my crypto accounts. Luckily, I hadn't funded that one yet. And they took all, it was just like a mess, man. It was like unraveling the worst, screw up in the world to try to get everything back in my name, because then they were getting all the authorization codes to my phone. It was just nuts. So, there's definitely some things that can be done there. It's tricky. And then you were mentioning about the institutions creating more volatility. The only thing I would dare say about that is that if you look at like an Apple obviously $2.5 trillion dollar asset right now. There's so many institutions that are just invested in Apple, and they're not selling on the whim of a panic, that I think it actually stabilizes. So having institutions in there, yes, they're going to play games because, let's be honest, they need to make their quarterly numbers. But at the same time, having big money that's not going to get shaken out very easily is definitely, in my opinion, something that shouldn't be feared too much.